we are hurtling off the edge of the cliff into a recession. That recession, we've been forecasting, Julian Bittle and myself at Global Macro Investor, from about this time last year, actually. We saw it in the forward-looking data, and the current data is catching up. So we're now, I use the ISM as probably my best guide to the business cycle, and that's kind of at this 48 or so level, 47 point whatever level, and really just below 47 is 100% chance of recession. Now, all the forward-looking indicators like new orders are completely off a cliff. Employment, prices paid, you name it, every single indicator. We have a database of 1,500 indicators at Global Macro Investor, and it's all falling off a cliff.
Real Vision CEO Raoul gives us the latest market update and where the economy is headed in the next few months. Raoul believes that the current market conditions in crypto present a sweet spot for investors. He acknowledges that crypto investments come with higher volatility, but also offer higher returns. Powell believes that despite the bearish sentiment in the market, the worst is behind us after seeing the bottom in October of last year. Raoul also discusses the recent stock market decline after the 37% drop in the Nasdaq from its peak. Powell believes that the forward-looking indicators suggest that we will hit the bottom of the current recessionary wave around April of this year, and that we can expect to see 2 to 3 quarters of negative GDP. However, he thinks this will be more akin to the recession of the 90s as opposed to the 08 and 01 recessions. Let's get right into the latest interview with Raoul Pal. Before we dive in, don't forget to hit the like button and subscribe to the channel if you enjoy the content we do here. Let's get right into the video.
This is the point where you get to on Twitter where everyone goes, there's a recession, surely stocks are going to go down. No, Sherlock, they've already gone down. The Nasdaq went down 37.7%, I think, from the high. But what's interesting is that the forward-looking indicators are starting to suggest that we will hit the bottom of the recessionary wave in about April. So we're likely to get, I think, 2, maybe 3 quarters of negative GDP. But I think it's more akin to the 1990 style recession, which was the stock market fell 20%, the economy fell 2%, ISM went down to 40 or so, it all recovered, there was some overhang, the economy was slow for a while, and then eventually recovered. A normal garden recession. That's what I think we're in the middle of. I think people are confusing prices as in markets. The unwind of everything that happened in 2021 got unwound in 2022. And I saw Dario Perkins on Twitter calling it the A-shaped economy. So as opposed to a V-shape, it was an A-shape. So it went up, came back down, and it's reverted back to trend. So almost all of the charts have reverted back to trend. I think oil still got a bit of a way to go. Nat gas got there. Most of the commodities have got there. Most of these things are down 30, 40, 50, 60, 70% now, taking the inflation fears out. But this recessionary thing is what's in everybody's head. And the narrative in the market is, well, just wait for the earnings leg. Do you not remember 2001? Do you not remember the second leg in 2008? Those were very different styles of recession to that, in my view. Of course, I could be wrong. My guess is when I look at the rate of change of the S&P or the Nasdaq, they've all entirely priced in a recession. So the Nasdaq priced in an ISM of about 37, which is where my forward-looking indicator, my Global Macro Investor Financial Conditions Index, has been pricing the bottom of the ISM trough. And it's all coming around the same date. So what's happened is the markets have been forward-looking. They discounted the recession fast, and they're now starting to discount the pickup on the other side. And that's coinciding with the rate of change of Fed increases coming down. The ECB are the same, the Bank of England are the same. Everybody's slowing down their rate increases and are going to pause mode. Whether we get one more hike or not, I doubt it actually, but there's a chance we get one more pause. The bond market's starting to realize that that's probably the case as well. Also, global liquidity, M2 cycle, stuff like that, that's been picking up. It started with China, and it's going to start resonating throughout the world. Things like the falling dollar, falling commodity prices start picking up this kind of rate of change of liquidity. That also suggests that we kind of are bottoming around these levels. So we've got global liquidity bottoming. We've got the rate of change of interest rates. That's taken the pressure off the neck. Jay Powell's had his foot on the neck of the markets and the economy. So he takes his foot off, things can rise again. So that's kind of what stage we're seeing now. I think earnings have been discounted in prices. I know the bottoms-up guys say, well, this is not right. And almost everybody on Twitter says that. I keep asking the poll. Everybody's still very bearish. All of the sentiment indicates everyone's maximum bearish. And using my macro framework I've been using for 18 years, I just don't think that's the case. Now, we're talking probabilities, not certainties. So anything can change here. But my view is that overall is that the worst is behind us. It bottomed in October when I wrote a big Twitter article and a big global macro investor piece calling it the bear market killer, which is October.
Raoul states that he's a bullish risk taker and that he flagged this in June of 2022 when he bought into the crypto market. He says inflation is expected to decline this year, with a sharp decline in the rate of commodities as well. With the decline of inflation and the dollar, he predicts that global growth will pick up and drive performance in technology, the Nasdaq, the S&P, and crypto, much like it did in 2018.
I'm now bullish risk, and I've been flagging this for a while, and I flagged it when I started buying crypto in June, and I flagged it when I re-added it, and I've been talking about, I think the inflationary pressure's coming. I think inflation goes negative next year, actually this year, sorry. I think the rate of decline of commodities is much sharper than anybody realizes. I think wages are rolling over. I also think rents are rolling over. So the whole lot is coming down, and that will go all the way through till 2024. We can talk about the longer term picture later. Do we get the secondary wave of inflation or not? Most of you know, I don't think so. So we've got rid of the inflation. We've got a weaker dollar, global growth picking up, forward-looking indicators picking up. Technology should outperform. This is very much like the 2018 episode where the Fed stopped hiking. That was December 2018. The markets just went on a tear. The Fed eventually cut rates in August 2019 and then stopped QT in September 2019. Over that period, I think Bitcoin did 285%, and many of the markets did really well over the course of that year. And generally speaking, at this point in the cycle, the kind of macro spring, you tend to see the S&P doing this, the Nasdaq doing this, growth tech doing that, and crypto doing that. And that's my expectation, that if you're not volatility adjusting the returns, you want to get the fastest horse, it's likely to be crypto, then it'll be technology stocks, the growthy end, stuff like ARK is already up 100% or so. Then it'll be the Nasdaq, and then it'll be the S&P. Commodities tend to do okay. Cyclical companies tend to do pretty well in this environment as well, tend not to outperform technology. Emerging markets tend to do pretty well, particularly if the dollar's slightly weak. I'm very bullish risk, bullish crypto, bullish technology, bullish carbon credits, bullish bonds, bullish gold, don't really have any of it. Starting to wait for things like copper because we've got some secular backdrops. I like secular trends. I don't tend to trade the cyclical stuff anymore. I find it a bit boring, and I don't think it's very easy to make money consistently over time. I like a secular trend, and when, for example, when you look at the technology stocks, like we can take the Nasdaq. If we take the Nasdaq on a log chart, we've come back to the bottom of the log trend channel, and we've had all of the bottom indicators and signals. And usually, if you can buy the cyclical sell-off when it hits the secular trend, that is the sweet spot. We're in that sweet spot now. We're in the sweet spot in crypto, technology. We will get there probably in copper as well, and a few other markets where it starts to get very, very interesting for very high future expected returns.
Raoul says that he prefers secular trends and believes the unwinding of the market in response to the events of 2021 and 2022 has caused many charts to revert back to their trend after accounting for inflation. He believes Jerome Powell has a significant impact on the economy and the market, and if he were to start easing, everything could rise again. What do you think about Raoul Powell's prediction for the stock and crypto market in the coming months? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.